Okay, so with that, I will actually go into the actual analysis of companies. Again, I just use the same process, the business analysis, financial statement analysis, pricing analysis. You can see that the way I do it is a very mechanical process. Okay, so hopefully, the idea here is today you don't just learn about Mapletree Commercial Trust, you also learn about the format so that eventually you can do it yourself. It's actually very mechanical. It's like for every one company, I take maximum about, I think, 45 minutes to do. Okay, so hopefully eventually you can also do the same. So business, financial statement, pricing, risk analysis, all these 3 points. So business analysis for REITs, of course, we try to understand their property. So you can see here, so Mapletree Commercial Trust, basically they have only 5 properties. Okay, and this is one of the very few REITs whereby all the properties are in Singapore. Okay, all the properties are in Singapore. To which its own, some people say that all property in Singapore quite risky, is concentration risk. But I mean, I look at all the properties, I don't think it can get too wrong. Vivo City, okay, I'm quite sure Mapletree Business City, okay, is actually quite interesting. Okay, the only one that is quite old, not performing very well is M Tower, used to be PSA Tower. Okay, the rest are actually still quite new. Mapletree Anson, and of course, Bank of America Merrill Lynch. This is just at Harbourfront. So this is the property portfolio that they have. Okay, so for under business analysis, of course, after understanding what is in the portfolio, okay, the thing that there are some numbers I want to pick up. So these are some of the definite numbers I want to pick up. So one is, of course, the occupancy rate. So this is important to me. And I want occupancy rate, portfolio occupancy rate to be more than 90%, which is happening in this case. So we can see the latest one we have is September 21. The portfolio level is 93.3%. Okay, like I said, the only one that suffered the most is PSA building. So by the way, for those who actually want an office at PSA building, probably you can get a very good deal there right now. Okay, it's quite bad. In fact, if it's below 80, it's actually quite bad. Okay, but from a portfolio perspective, it at least passed my test. So more than 90%. Okay, so where do we actually get all this information? Okay, maybe I just do a quick demonstration. You can go to the company website. Mapletree Commercial Trust. Okay, so this is the two things I go to: asset portfolio, portfolio overview. Okay, point 1, investor relations. You look under financial information. Okay, then look for result presentation, and not business presentation, result presentation. Okay, so this is where I just took up all the information. It's just on the slides. You can see it's all cut and paste. Okay. Okay, partly it's because I'm lazy, but the other one is also I want to pinpoint to you where are the place you can do very simple business analysis, which is easily cover 60 to 70% of what you need to know. Okay, occupancy. So anyway, it passed my test. So for REITs, number 1, look at where are the properties. Number 2, what is the occupancy rate? Now, of course, I want to look at the dividend profile. Dividend profile. So let's take a closer look. This is in 2011. So they actually gave the past 10 years. So this one is actually from the website. You actually look under dividend. Okay, they will actually tell you. So generally speaking, you can see it's an increasing trend. Except for 2019-2020 period for obvious reasons because of COVID. Then after that, it seems like it is coming back already. Okay, of course, this is a profile that I like. It's actually growing and it seems to be coming up. So it's good to study this dividend profile. Okay, what is this income profile? So now when we actually look at annual report, and in fact, if you actually look at information from the stock screener, they usually pull information from annual report, which can be late. So it's always good to compare with the latest results. How do you actually get this piece of information? You go to sgx.com, securities. Then after that, we go to company announcement. Mapletree Commercial Trust. Okay, then you look for financials. Okay, so down here, look for financials. Financials. Okay, so maybe I should cheat a little. Down here under announcement, okay, announcement, you look for financials, financial statement. Okay. Okay. So this is the latest one that they have. This is the latest one. Also, you have the latest numbers as a comparison. Latest numbers as a comparison. Please take note, the stock screener may not have the latest number, so it's good to actually have a comparison. Okay, so as you can see here, what I gathered here is this. In fact, it's the things, basically the things I want to see. Can you see that net property income is increasing? And obviously the profit is actually increasing. So in fact, 31st December, the same period last year, they are making losses, but now the profit's increasing. So of course, this is something good for me. Okay. Okay, so in their presentation report, usually they share the outlook. So of course, this is outlook done by them. Okay, there will be a level of independence issue, but anyway, it's actually good for references. So as per what I actually gathered from their presentation slides, the retail rent first half to 2020 likely to remain stable before picking up more meaningful after second half 2022. So basically, they're actually expecting things to improve, like for example, for VivoCity. However, they actually do noted that a potential GST hike in 2022 could impact the level of domestic discretionary spending. Okay. Office, healthy demand, tight supply situation, overall increase in office rent island-wide. Hybrid working could keep the overall office demand footprint below pre-pandemic level. However, CBI expect further rental growth in the midterm, supported by the rent in demand from the tech sector and limited new supply. So generally speaking, so things are actually looking good for the retail and the office sector. Okay, at least based on the reports that's actually saying here, and of course for 2022. Okay, so this is how I do business analysis. Let's go through a quick look again. What are the sectors? So number one, property portfolio one. Number two, I look at occupancy. Number three, I look at the historical dividend profile. Number four, I look at the income. And number five, I look at the outlook. Okay, so these are the few things I look at. Okay, thanks for the questions. I'll actually try to address them later. Now, okay, then of course, same thing. We have to go for financial statement analysis. For REITs, I only look at two ratios. Gearing ratio, less than 40% pass. Interest cover, more than 3 times pass. So my criteria is gearing ratio less than 40. Interest cover, more than 3 times. So this is definitely a pass. Okay, so we actually spoke about this. So debt maturity profile. So how do we actually see this? Preferably, we don't have in one particular year there is a lot of loans that are being matured. So what I mean by significant amount, that means more than 35%. So let's say, in one particular year, okay, we have more than 35% of the loan maturing. And if let's say that year's a bad year, some crisis or whatever, then the REIT may get into trouble. Okay, so we want to have like a well spread. Like in this case, you don't have in any particular year, like for example, more than 35%. So again, this is actually quite good for me. Okay, let's look at pricing analysis. So for REITs, right? For REITs, I just compare with this thing called the fair yield, as I mentioned. So down here, what I did here is this, I actually do a very precise calculation for the REIT. So basically, fair yield is simply the average dividend yield over the past 3 years. Okay, so what is fair yield? Fair yield is the average dividend yield over the past 3 years. So I use that as a fair yield, I use a benchmark, and I just compare the current yield versus the fair yield. Okay, so how I calculate the fair yield, actually down here, I actually calculate the average price for each particular year. As you can see here, how do I calculate this price? For those interested, you can go to Yahoo, go and download the pricing. So Yahoo, you can actually go and download all the pricing. Okay, and from there, you can just do an average. So dividends, so this is actually from the website. Okay, so I just copy it from the website, and I actually calculate the dividend yield over the past 3 years. So 2019, averagely, okay, the yield is 4.5%. Okay, 2020 is 4, 2021 is 4.5%. So what it means to me here is this, that means people are actually expecting around 4.5% when it actually purchased this REIT. So this is how I make sense of the fair yield, or people are willing, on average basis, people are willing to get 4.5% to buy this REIT. Okay, so again, there's 101 ways to do valuation. This is one of them. All I can say is actually worked well for me. Now, so of course, this I actually do track. Can you see in 2017, 2018, apparently people are asking for more. But it seems that 2019, something must have happened. So they are actually willing to go for less. So in that sense, I think it doesn't make sense for me to consider anything before 2019. I just look at the past 3 years. So of course, this part need a little bit of judgment. And why in the end, I didn't consider 4%. I think that's an outlier. So I'll just put the value as 4.5%. I average out 2019, 2021, of course, it's 4.5%. And okay, on the date that I actually did this, is the price was 185. I think the price dropped further today. So in that case, the current dividend yield now is probably above 5.25. Is definitely above the fair yield. So I think I would consider this as undervalued at this point in time.